Hey, what up, guys? Good morning. Sean Trades here. We are now going to do a market analysis for the week of April 7th. Obviously, we had a pretty wild week last week with such a aggressive pullback during the Thursday session and a very strong rally to finish the week on Friday. But now, looking at the ES future chart here, we are overall kind of in a tough spot as we did, in fact, break below the annual trend line here, which is not good, right, for the bulls. We still do have some time till the market, and we have FOMC plus CPI this week. Again, that's another load of volatility coming. So we don't know what's exactly going to happen. But as far as the structure is concerned, the main thing for the bulls here is to reclaim the green trend line. Okay. So Friday we got a little close, but we just really couldn't hold above the trend line there, and we sort of gave it up. And with the overnight future session so far, it's pretty much flat. I mean, we're flagging right here, so you can make an argument that you got a bull flag forming up, something like that right there. And maybe we'll break out, maybe we'll break down. Who knows? As you can see on the 4 hour chart perspective, this could be another bear flag, right? So flag here, flagpole. This is a flag and breakdown, right? So 4 hour setup. This is a short setup that I would get in the breakdown and the retest, and we failed to reclaim back above the previous support, right? So my short, I didn't play this, but my short entry would have been right here technically. So, if we're looking at it that way, it's not looking too pretty for upside unless we have a lot of buying pressures come in. And if we can sort of take out the Thursday flush session, so 52.82 on the ES, that would be great. And all these good liquidity here, all these orders are going to be used to push the market to a new all-time high, possibly the 5400s on the ES. Looking at SPY here, very similar to ES. We broke below the annual trend line, retested it Friday, and had like a pretty ugly pullback towards end of the market, and overnight future session so far not holding up here. As you can see, setups very similar to the ES example I just went over. Previous breakdown, retest of that breakdown, and rejection of that reclaim. So if we do end up breaking down further, our obvious first price target will be 512 level right here. We are gonna test this bounce level once again. And if we continue to drop further, the next level down should be 511. And then we have the 507, 508 level. Now, the thing to remember and realize here is that if we do actually start breaking down and continue hitting the lower price targets, that means that the annual uptrend, this huge, obviously a very strong trend that's been going on for quite some time, right? This may come to an end. Again, don't just assume that we're going to crash. And you can't also assume that SPY is going to go to 600 either. You just have to play what the structure gives it to you on a daily/weekly basis and just go from there. Okay. All I'm saying is that if this breakdown does continue, we are going to start entering into a bear phase market, right? Again, I always say again because people automatically like to assume when I say bear phase, we're crashing. Doesn't mean that. It just means we're going to be creating lower highs and lower lows. So once we take out the 507, 508 level, we have this huge gap down here, which could be filled all the way down to the psychological 500 level, which ends at the 497 level. So those are a possibility. And of course, if we do reclaim the 520 level, then don't have to worry about downside as much. We most likely will be pushing to a new high, as I mentioned on ES as well. most likely 540s on SPY. Okay, but for now, it's not looking the best. We'll see how things change in about 6 hours for me. Everyone has different hour time zone, right? 6 hours for me, and even on Tuesday, Wednesday after the FOMC and the CPI data. But for now, it's not looking the best for upside. But if anything changes, I'll keep you guys updated. Thanks, guys.